the stock. This thing right now, it's up, let's see, 17.5% from $408 a share to $480 a share. Quite a move there. I am expecting some profit taking here with ANET. I mean, anytime you get, a 17, almost 20% move, overnight, there are going to be people who are going to be like, I'm going to take some profits here. A 20% return on an annual basis is good. If you've been in this stock here since, let's say, since the beginning of the year, year over, or just just the yearly behavior here. I mean, it's up from say 280 up to 480. I mean, that's huge gain. So I will be using the strategy that I use for the situation. So let me get rid of the Fibonacci and I can redo it so you can see how I do it here. So here's the current price, and this will move. So as the morning goes on, I'll just kind of continue to update my Fibonacci level here, and I'll just move it to the next price until it opens. So I connect the current pre-market price down here over to the previous close, and that stretches out the Fibonacci for me. So I get these levels kind of compressed here. And essentially what I do is I look for the stock to break down below a level, one of these Fibonacci levels, even below the open. So if it goes down below the open and it pops back up above the open, I buy at the open. And I don't buy my entire position at the open. I just get a starter going. And then as it continues to move higher, pullbacks, if it's going to move higher, I'll buy the pullbacks, buy on red, and then watch it continue higher. So, sometimes it works out really well, sometimes it doesn't. Sometimes, it's a break-even trade, sometimes it's only a little bit better than break-even, but sometimes, it works out really well. Sometimes it's even negative. But usually it's pretty easy to tell. It's pretty easy to get out of the trade on a large cap like this. They tend to not move too quickly, so it's easy to cap my risk. I cap my risk at 0.5% on any given trade. So it's pretty easy to get out of that trade on these things. The small cap momentum, the ones that move, like 30 or 40 cents within, a matter of about 4 or 5 seconds. Sometimes it's a lot more difficult, but this one, large caps tend to be easier. So I'll continue, as the morning goes on and it gets closer to 9:30, I'll continue to move this Fibonacci. So then the next strategy I use is I have a 75% level here. This is not a Fibonacci level. It's just I prefer 75. And so then if it breaks down below that and then pops back up, I'll buy the 75% level and then start taking profits at the open. Sometimes it'll still run past the open. You just got to kind of figure out, strength when these things are making strong moves, or when, volume is weak and it's just up on, it's up really high on weak volume and stuff. Things can get kind of sketchy pretty quickly. So it's just sort of a measure. You got to know, keep an eye on relative volume, and you just got to have kind of experience to be able to figure out, when to let go of a stock. I'm not perfect at it. In fact, I have room to improve on my exits, but that's trading. And so then the next one that I look for is if it starts to dip down past the 61.8 fib, I'll start to average into a position with something like ANET. 100 shares is going to be $48,000, which is I only have a small trading account. I don't use a lot of money to trade. It's just sort of a side gig. And so 100 shares on ANET would be a vast majority of the account value, my trading account value. If I average into 100 shares between these two, then that means I'm looking for a bounce in here somewhere, and then a move back close to either to its open or close to the open, and I'll take profits as it hits the 75% level. So and that strategy is going to apply to SPG as well. SPG right now is up, in comparison, it's up a meager 3.78%. But it ought to give an opportunity for a trade. And so, as of right now, if SPG opened right now, it would open up at $155 a share. And so again, looking for a dip down below the open and then a pushback through the opening price, or same scenario with the 75% level, or averaging into, on this one, I'd probably take average into somewhere around 200 shares on this one. And so, those levels are between 152.86 and 152.20. And again, here I'll just kind of go through how I do the Fibonacci's. I start my Fibonacci here at the current price, then bring it down to the previous day's close. And then as time goes on through the morning, I'll just kind of adjust my Fibonacci so that it stays current. And then when the open comes around, I'll have my Fibonacci at the opening price, and then use that opening price to judge where I get into an entry for a trade. Under Armour. So Under Armour has brought itself back from the dead here. It had an upside surprise on revenues of 4.63%, $68 million more in revenues than expected, and it also had an upside surprise in earnings per share of 109.2%. Its forward guidance is strong, and so I imagine actually that Under Armour will probably be my top trade for the day. It's at $21, almost $22 a share. Actually, pre-market here it's $24 a share. Sorry. I can average into a little bit more shares there, and so it will be a bit more profitable for me to trade. Then there's BBLG, small cap momentum. Right now it's up 28%. I'm not really excited about small cap momentum these days. So at least BBLG at least has a headline. A day after Don Henke disclosed in a regulatory filing a 70.9% stake in the company, BBLG has just risen. Pre-market, it was up as high as 45%. It's pulled back now to 29%. So I don't know if it if this stock starts hitting the scanner and showing momentum, then I might trade it. And then we've got where to go. I'm going to go to my daily. BAOS. I have no idea why it's popping up. It's at $2.70 a share right now at a previous close of previous close of $1.57. So it's up 72% right now pre-market, but I can't find any news on it. And if I can't find any news on it, then I don't trade it. It's probable that this is just going to be some kind of stock twits, Wall Street bets, pump and dump kind of thing, and just getting a whole bunch of people to buy into something, so they can be bag holders. We've all been there. It's part of the learning process. So as of right now, BAOS, it's just up on watch. I seriously doubt that I'll trade it, even if it does start to show momentum. BBLG is a possibility. I don't know. We'll see. Under Armour is a strong possibility. ANET is a strong possibility, and SPG is a strong possibility. Broader market here, let's take a look. So if the S&P opened up right now, or if the SPY opened up right now, it would open up 0.08% higher than the previous day's close. It's charting its way into newer all-time highs. There's bound to be a time when this thing corrects or pulls back even, but we just went through what was just north of a 6% down move between the beginning of October and was it October or September, or the beginning of September into the end of October, actually halfway through. So don't get in front of the bulls in this thing. I think there are a lot of people who are very skeptical about these moves that the SPY is making, but it's just the way it goes. So I will be looking for opportunities to go long the SPY today, and it'll be a setup on the VIX that I like to use. I like to use the relative strengths. When the relative strengths on the 1 minute and the 10-minute SPY correlate with the relative strengths on the 1 minute and 10-minute VIX, then I like to start a trade. And so that is if the SPY goes into overbought simultaneously while the VIX goes into oversold, then that's an indication of a short-term intraday top. So that way, I can buy some puts just for a quick scalp or a trade. The long side, what I'd really like to see is, being that this is a bull market, what I'd like to see is that the SPY on the 1 minute and the 10-minute go into oversold, just intraday basis, and the VIX goes into overbought, and then it would be an opportunity to go long the SPY on that setup. And when you trade in the same direction as the equity. So if the SPY is bullish, and so if I'm buying the SPY, for it to go up, the odds are in my favor that the SPY will go up. So and the entry will just kind of depend on the relative strengths of the two. So Bitcoin is doing a pretty good job here of it hit a new all-time high, couldn't hold it, pulled back, and now it looks to me like it's gathering some more steam to push back through this 64, roughly 65,000 spot, and then probably eventually push back these highs, push back above these highs too. 67,016 was the most recent high. There's no reason for it to pull back. We're in a bull market. Okay, everybody, that is going to be my pre-market trading strategy session. So good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at the recap. I am out.